Hey everybody, this is Carlos, and I'm here to create for you a update. Today is Friday, January 22nd, 2016. I just want to share with you the results that we had recently trading the currency market. All right, so as I promised, a lot of people been asking me about my results and trading results due on to the currency market, and I want to share with you the mistakes that even though that I know how to do them, sometimes we actually deploy the mistakes because we kind of try to shortcut the process or the thought process of the systems or parameter itself. So that was my key here, and that cost me a lot of money, and that involves a loss right here in a position that I was thinking or assuming that the market indeed was ready to go up, and since I did not follow my checklist, there was a couple of parameters that they were not fulfilled, but I thought they were about to, being given away. So basically, I tried to shortcut the process, and it cost me a lot of money. Eventually, I waited, and once I waited, the results paid for itself. So I just wanted to share with you that in this video right here. So let me bring in the results so far. This week, not much of movement. If you can see, only one contract per trade, so I'm pretty control in terms of my risk. So if you can see, these are from the 21st, right, of January. 1, 2, 3, 4, 5, 6, 7, 8 trades, and one that did not get triggered on the Australian dollar. It was a floating order to go long. You see the buy limit, and I had to cancel it because they never triggered. Now the reason it was not triggered is because typically I don't have time to be on the markets on the overnight session, so I leave my floating order with the stop losses. So you can see here the British pound, I went long at 41.19, which is 41.98. I'm sorry, just writing there. I'm going to explain you the thought process that I went through and the mistakes that I typically made. So let's just go on with it. So if you notice here, that was a buy setup. This is a pivot step that I left. If I drop down to the 30-minute, I was following up on the 30-minute. Pay close attention. If you've been following my work for a couple of months, you can clearly see here that the market provided across the moving average, but the high here was not being taken. Nevertheless, I used the pivot step, right? So let me try to go into a 50-minute chart, and you'll see what I'm talking about. This is how it looks. That's a 50-minute chart with a pivot step. And once the market broke above, I went and took a buy opportunity. So that's 41.98 on the pivot low right here. Basically, that translating to about roughly 6-7 pips away from it. I placed my stop loss. So I went on, and when I came back, I found out that I got stopped out. So that was a very hardcore loss right there of about, I would say, 80 something. So you can clearly see here, that's an 81 pip loss right there. Now eventually I waited. I did not get emotionally attached into the trade, and this is the learning process that I want you to go through. And I said, you know what, fine, I'm still on the 4-hour chart. Let me bring the 4-hour chart here. I was extremely confident that the market was extremely oversold, and I was expecting a potential bullish scenario. So since I did not follow through my own rules of engagement, I'm going to show you the reason why I lost money. Even though that on the lower time frames, on the 15 and 30 minute, I have a break of the pivot step, a moving average crossing to the upper side, I explained clearly that in order for me to clarify that this was a definitely potential movement with all the confirmation, I must at least have a 1-hour confirmation moving average. So basically that was my entry right there. If I go to the 1-hour chart, take a closer look what the moving average were doing right there. They did not cross to the upper side. So that pretty much gives you the in and out. of understanding that I thought they were about to cross, but you never guesstimate into the market unless you have a real reason for it and a fundamental basis about it, so you can take that risk. Since I was not going to be on the charts itself, right? I thought that I could pretty much put the floating order, get fill, place my stop, even though that if they come back down, they're probably going to retest all these lows right here and not take me out of the market. I was wrong. They took the stops and they eventually move on. So this is a typical scenario when you're still right on the trend, but you get stopped out, right? So lesson learned. The next time, just to make sure to go and fulfill every single step of the way before taking a trade by following your strategic basic plan of action, right? So follow your rules, follow the profile of the market based on what your expectancy, and most importantly, assuming that you have a specific, let's just say once again, that you have a very specific plan of action. Just create a checklist for all the criterias, right, that you take before taking a position, and go one by one. All right, so I'm bullish on the market. Pivot step technique on the 30-minute chart is going up. Cross of the moving average on the lower and mid time frames are going up, but cross of the moving average on the lower time frames are definitely not at par yet. They were flat, but they're not following through, and a price action behavior was not taking on the bigger time frames that can trigger me that the market was ready to continue on an upward movement. You see, so I basically followed through, and I assumed that by having this tree going in favor of the trend, I might as well could predict the movement of this one, just because I was a little bit lazy in terms of staying at the computer and waiting for confirmation. Make sense? So I hope you learn a lot from this. Now eventually, let's just see the results, right? Once everything just boiled down into that perspective. I went ahead and pretty much on the opening of the European session again, I went long at 42.24 area. You can see it right there. Let's just follow through the exact same criteria. So let's just go ahead and check these out. Moving average on the 1 hour chart, checked. Prior support and resistance being taken, checked. Right? A pivot step formation in the bigger time frame and short-term time frames where the market closed above those, check right there and check right there. So that one is a valid one for me. And then I pretty much followed through that the market was indeed coming from a pullback, breaking above again towards the upper side. So I was able to definitely take this trade. I dropped down to 30-minute chart, and 30-minute chart, it was pretty much the exact same thing, right? So basically, once again, 1 hour chart, moving average was already backing it up. 30-minute chart was pretty much finalizing the process of breaking the prior highs, right? Across of the moving average in this level right there on 30 minutes, backing it up, check. And then a second pivot step formation right in here provide me with the opportunity for me to go long as soon as they break it, not for the first time, but for the second time, right? So, and I mean for the second time because this is another pivot step right there, right? So there was a cross of the above resistance on the pivot step here with a moving average cross. Here's another pivot step with a cross right there backed up, and the cross of the moving average on the 1 hour chart is backing it up. Everything was lined up in order for me to be successful, and that's the result you see right here, that I was able to recoup most of the losses that I took on the prior one. Now take a look that I followed through my specific rules of engagement. If you notice, 42.83 was my predicted level. If you're a member of Foresight FX, you saw that one happening. So take a look at where my target price was set at, 42.83. That I was able to get more? Yes, but once again, I'm following strategic placements here based on my analysis due to the fact that I was not going to be on the computers anyway. But in this time, I waited for all the things to line up in order for me to be successful. The exact same thing applied when I traded on the Australian dollar. The exact same applied on the pound yen. In this case, I closed it earlier, did not reach the target. Now this one reached the target. This one I closed it out because I didn't feel comfortable with the euro dollar. And if you see the euro dollar, it's been crazy though. I was lucky to get out on 5 pips. And then we have then a target price of 849.97, pretty much recovering from this one, you know, neutralizing that loss, which is pretty awesome. And that was on the dollar Canadian. And I explained to you earlier in the previous video that this one was based 100% on the news report on the oil market. So that was pretty nice trade setup right there at the news report, because Canadian obviously depends on the oil for the major income from the country itself. So, and then once again, the pound dollar, I was able to recover from that one, and this one did not get filled. And this is how my week pretty much looks at the end. Only trading one contract, very systematic approach, following through the specific rules of engagement, and most importantly, knowing exactly when to get in, when the market will get out, and the probability of returning points on the synergy zone levels. So this is what I wanted to share with you in this video. I hope you can take it from heart that not always you're going to be winning them. Is how you come up from the losers and learn your mistakes and address the part of why did you lose in this trade. And I clearly explained transparency here, right? With transparency, I'm not perfect. I try to make, you know, a shortcut of my own system and look at the results. Now take a look at the difference when you follow through the strategic rules of engagement. So I mean, the numbers speak for themselves, and the reason why for everything that happens is extremely clear. Hope you learned this, take it to heart, and make your own rules of engagement and trade plan. And most importantly, take the opportunity to join us in the inner circle. If you want to learn how to create this systematic approach where consistency is the major focus, right, and importance of our strategy, by learning when the probabilities of the market being reversing and extracting and contracting the incredible levels of targeting pricing, right? Even you don't want to be like pinpointed. You just need to know exactly where the market will head and stop. Even if they continue on the upper side, all I care is about the profits, okay? All I care is about the profits. And you want to learn the ins and out of this strategic setup. I invite you to join the Inner Circle program. It is one of the most complete and robust systematic approach. It's a synergy of 3 of my top hedge fund manager mentors that I extract the most out of them on applying the techniques in a systematic approach that works every single time, because it's automatically self-adjusted based on price action itself. So basically, it is not 100% reliant on indicators. It's based on price action. And that's what I want to share with you right now today, and share the ins and outs, the pros and cons, and how you can become very successful at trading by following through specific set of rules. So I welcome you if you're already part of the member of the Inner Circle. If not, just sit aside, think it through. And I know, sometimes it's hard to, invest in yourself, but think about your future and think about one thing only. If by now you're been trading for more than 6 or 8 or 1 year and you're not reaching the consistency level that you're looking for, something is wrong. Give us a benefit of a doubt and give us a chance to teach you the real benefits of understanding the price action activity at its best, and learn how to predict market movement with high accuracy on your benefit. This is Carlos Diaz, and I'll see you in the next video.